Good day. We are the Group 1 from B417, and we're going to read and discuss the Customs Administrative Order 1-2019, the subject of which is Post-Clearance Audit and Prior Disclosure Program. This order implements the post-clearance audit functions of the Bureau found in Section 1000 to 1006, Title 10, and B, other related provisions of Republic Act Number 10863, otherwise known as the Customs Modernization and Tariff Act. Section 1. The scope. This order covers the post-clearance audit of all records required to be kept by all importers, beneficial or true owners of imported goods, customs brokers, agents, and locators as provided in Section 1003, A, B, and C, Title 10 of the CNTA, and the Prior Disclosure Program as a compliance and revenue measure. Section 2. Objectives. To prescribe the principles, purposes, and methodology of the post-clearance audit system, record-keeping requirement, and the period covered by the conduct of audit. Second, to provide guidance for record-keeping, document retention, and other legal obligations of importers and other customs stakeholders and the adverse consequences of non-compliance with customs rules and regulations. 3. To facilitate trade by strengthening customs controls from the border to the back end of the cargo clearance process under a regime of informed compliance. Fourth, to promote compliance with customs laws and regulations by providing a non-punitive facility for importers to voluntarily disclose or report to customs authorities the errors in goods declarations and the payment of duties, taxes, and other charges. The second to the last objective is to provide a clear set of policies and guidelines in the application and availment of the PDP, and lastly, to generate additional customs revenues with least administrative costs to both the government and the importer.
Section 3. Definition of terms. For purposes of the CAO, the following terms are defined as follows. 1. Customs broker shall refer to any person who is a bona fide holder of a valid certificate of registration or professional identification card issued by the Professional Regulatory Board and Professional Regulation Commission pursuant to Republic Act Number 9280 as amended, otherwise known as the Customs Brokers Act of 2004. 2. Customs clearance shall refer to the completion of customs and other government formalities necessary to allow goods to enter for consumption, for consumption, warehousing, transit or transshipment, or to be exported or placed under another customs procedure under the following customs regimes. 3.2.1 Customs clearance for consumption entries shall refer to the procedure of making the final payment of duties and taxes and other charges at the port of entry, and the legal permit for withdrawal has been granted. 3.2.2 Customs clearance for warehousing entries shall refer to the procedure of filing of goods declaration and the duties and taxes has been secured to be paid at the point of entry, and the legal permit for withdrawal has been granted. 3.2.3 Customs clearance for transit entries shall refer to the customs procedure under which goods, in its original form, are given permit to be transported under customs control from one customs office to another or to a free zone. 3.2.4 Customs clearance for transshipment entries shall refer to the customs procedure under which goods are given permit to be transferred under customs control from the importing means of transport to the exporting means of transport within the area of one customs office, which is the office of both importation and exportation. 3.3 Fraud shall refer to the commission or omission of any act resulting in material false statements such as but not limited to the submission of false or altered documents in connection with any importation knowingly, voluntarily, and intentionally done to reduce the taxes and duties paid or to avoid compliance with government regulations related to the entry of regulated, prohibited, or restricted goods into Philippine customs territory through through misdeclaration, misclassification, or undervaluation. 3.4 Free zones shall refer to special economic zones registered with the Philippine Economic Zone Authority or PEZA under Republic Act number 7916 as amended, duly chartered or legislated special economic zones, and free ports such as Clark Freeport Zone, Poro Point Freeport Zone, John Hay Special Economic Zone, and Subic Bay Freeport Zone under Republic Act number 7227 as amended by Republic Act number 9400, the Aurora Special Economic Zone under Republic Act number 9490 as amended, the Cagayan Special Economic Zone and Freeport under Republic Act number 7922, the Zamboanga City Special Economic Zone under Republic Act number 7903, the Freeport area of Bataan under Republic Act number 9728, and such other freeports as established or may be created by law. 3.5 Importer shall refer to the following. 3.5.1 Importer of record or consignee, owner or declarant or a party who A. Imports goods into the Philippines or withdraws admitted goods from the free zones into the customs territory for consumption or warehousing, files a claim for refund or drawback, or transports or stores such goods carried or held under security, or B. Knowingly causes the importation or transportation or storage of imported goods referred to above, or the filing or refund or drawback claim.
Section 3.5.2. A person uh, ordering imported goods from a local importer or supplier in a domestic transaction. If A. The person placing the order controls the material, terms, and condition of the importation. B. The person placing the order and the importer or supplier are related in such a way that the former may be considered as the beneficial or true owner of the imported good, as may be exemplified by the following circumstances. 1. The person placing the order is the sole buyer of the goods imported by the importer of record. 2. The importer of record is an affiliate of the juridical entity which placed the order. Or number 3, the importer of record and the entity which placed the order are owned by the same set of majority stockholders, whether normal or beneficial in both corporation. Letter C. The person or entity placing the order furnish the importer or the exporter with the technical data, molds, equipment, other production assistance, material, components, or parts with knowledge that this will be used in the manufacture or production of imported goods or the goods to be imported. 3.5.3. A person whose activities requires the filing of goods declaration. Or 3.5.4. An agent of the importer as described in the section 3.5.1 of this CAO. Section 3.6 in advertent error shall refer to the mechanical, electronic, or clerical error committed unintentionally by the importer and occurred notwithstanding the maintenance of internal controls necessary to avoid such errors. Inadvertent error are used in the CEO amounts to simple negligence. 3.7 Locators. It shall refer to the person authorized to bring imported goods into the free zones such as special economic zones and free ports. 3.8 Misclassification shall refer to the use of insufficient or wrong description of the goods or the use of erroneous tariff headings resulting in deficiency between the duty and tax that should have been paid and the duty and tax actually paid in order to avoid compliance with government regulations related to the entry of regulated, prohibited, or restricted goods into the Philippine Customs Territory. 3.9 Misdeclaration shall refer to a false, untruthful, erroneous, or inaccurate declaration as to quantity, quality, description, weight, or measurement of the goods resulting in deficiency between the duty and tax that should have been paid and the duty and tax actually paid and or to avoid compliance with the government regulations related to the entry of regulated, prohibited, or restricted goods into the Philippine Customs Territory. 3.10 Negligence shall refer to the failure to exercise reasonable care and competence through act or acts of omission or commission in ensuring that a statement made is correct, resulting in a deficiency in taxes and duties paid. 3.11 Principal place of business. This shall refer to the headquarters that holds the senior executive of a firm and is usually the uh, center from where other locations are controlled. It likewise refers to the place where a corporation offers officers direct, control, and coordinate the corporation's activities and where the books and records are kept. 3.12 Prior Disclosure Program shall refer to a program based on international best customs practice, authorizing the Commissioner of Customs to accept as a potential mitigating factor prior disclosure by importers of errors and omission in goods declaration resulting in a deficiency in duties and taxes on past importation. It may also include disclosure on royalties and other proceeds of any subsequent resale, disposal, or use of the imported goods that accrues directly or indirectly to the seller.
3.13 Post-Clearance Audit Group shall refer to an office created under Executive Order Number 160/2003 as amended by Executive Order Number 46/2017, mandated to conduct audit of importers, locators, and all parties engaged in customs clearance and processing. 3.14 Reconsideration of audit findings shall refer to a plea for the reevaluation of the audit findings on the basis of existing records without need of additional evidence. It may involve both a question of fact or question of law or both. 3.15 Reinvestigation of audit findings shall refer to a plea for the re-evaluation of the audit findings on the basis of new discovered or additional evidence intended to be presented in the re-investigation. It may also involve a question of fact or of law or both. 3.16 Undervaluation shall refer to situation when the declared value fails to disclose in the full price actually paid or payable, or any dutiable adjustment to the price actually paid or payable, or when an incorrect valuation method is used or the valuation rules are not properly observed, resulting in discrepancy in duty and tax to be paid between what is legally determined as the correct value against the declared value. Section 4. Requirements to keep records. 4.1. Audit and examination of records. Within 3 years from the date of final payment of duties and taxes or customs clearance, as the case may be, the Bureau may conduct an audit examination, inspection, verification, and investigation of records pertaining to any goods declaration, which shall include statements, declarations, documents, and electronically generated or machine readable data for the purpose of ascertaining the correctness of the goods declaration and determining the liability of the importer for duties, taxes, and other charges, including any fine or penalty. 4.1.2 Period of limitation. In the absence of fraud, and when the goods have been finally assessed and released, the assessment shall be conclusive upon all parties 3 years from the date of final payment of duties, taxes, or upon completion of the post clearance audit. 4.2 Entities required to maintain and keep records. 4.2.1 Importers. All importers, including those mentioned in the definition of importers, insofar as the application of post-clearance audit in Section 1005, Title 10 of the CMTA are concerned, are required to maintain and keep all records of their importations, book of accounts, business, and computer systems, and all customs commercial data, including payment records. 4.2.2 Customs brokers and other parties. All customs brokers and other parties engaged in customs clearance and processing are required to keep manual or electronic copies of the records covering transactions that they handle. Should electronic copies of records be maintained, the record keeping must be compliant with the applicable laws, rules, and regulations on electronic data. 4.2.3 Locators. Locators are required to keep records of all transactions and activities relating to the admission and withdrawal of goods from the free zones in the customs territory. 4.3 Purpose of keeping records. The records shall be kept for the following purposes. 4.3.1 To confirm the truthfulness and accuracy of the goods declaration and transaction value of the imported goods. 4.3.2 To check the adequacy and integrity of the manual or electronic system or systems by which the required records are filed, maintained, and stored, whether specific transaction-based or account-based. 4.3.3 To determine the level of compliance of importers, customs brokers, locators, and other parties required to keep records herein with laws and regulations which are enforced by the Bureau, whether or not such regulations were issued by the Bureau. And 4.3.4 To serve as basis for the imposition of sanctions for non-compliance on record-keeping and non-compliance of regulatory obligations of the importer and other entities required to keep records subject to applicable laws, rules, and regulations.
4.4 Period and place to keep records. Importers, as defined herein in Section 1003 of the CMTA, are required to keep all records pertaining to the ordinary course of business and to any activity or information contained in the records required by DISCAO and by the CMTA at their principal place of business for a period of 3 years from the date of final payment of duties and taxes or customs clearance, whichever is later as the case may be. All parties engaged in customs clearance and processing as well as locator or person authorized to bring imported goods into free zone are required to keep records related to such customs clearance and processing at their principal place of business for a period of 3 years from the date of filing of the goods declaration. 4.5 Records required to be kept. The following records are their equivalent documents are required to be kept for the purpose of post-clearance audit. 4.5.1 Documentation on the entity organization and structure, which includes a articles of incorporation, article of partnership, registration certificate with the Department of Trade and Industry, and like. B. List of incorporators, stakeholders, partners, board of directors, and owners. C. Organizational structure. D. Management and key personnel involved in import processing, including authorized declarant and their specimen signature. E. Capital commissions. F. Stocks and transfer book. G. General information sheet. H. Information on the parent company, subsidiaries, and affiliates and their capital composition. I. List of importers, suppliers, and and nature of relationship with the importer pursuant to Section 701C, Chapter 1, Title 7 of the CMTA. J. Audited financial statement and tax return for income tax, withholding tax, value-added tax, excise taxes, documentary stamp tax, and capital gains tax. K. General contracts and agreement with regular or principal supplier. I. Company profile, history, and description of operation. M. Relevant board resolution, and N. Permit and licenses. 4.5.2 Documentation on records, orders and purchases, which includes a sales and other relevant related agreement in whatever form, including those covering distribution, royalty, agency, warranty, terms of payment, and the like. B. Correspondent correspondence or communication relating to the import transaction in whatever form, including purchase order, vouchers, confirmations, pro forma invoice, acknowledgement receipts, notice, advisories, and the like. And C. Product description or specification such as brochure, manual, catalogs, pamphlets, filters, flyers, and literatures. 4.5.3 Documentation on shipping, importation, exportation, and export, which includes A. Goods declaration and proofs of payment of duties and taxes. B. Commercial invoice, non-commercial invoice, and/or consignment agreement. C. Imports and/or export license or permits. D. Bill of lading, master airway bills, house airway bills, and other consolidator bills of lading. E. Shipping instruction and/or freight forwarders instruction. F. Certificates of origin, certificates of eligibility, certificates of inspection and loading, and/or certificate of identification. G. Freight and insurance contract. H. Packing list. I. Transshipment permit, boat notes and/or special permits to transfer goods from one customs territory to another or from one vessels to another. J. Quota, allocation, or certificates. K. Customs brokerage, logistic or freight forwarding agreement, billing, statement of account and/or receipt. L. Receipt for arrastre charges, cargo handling and storage fee. M. Short ship and/or bad order reports. N. Goods tally record or its equivalent. O. Letter of credit and application for letter of credit. P. Offshore monetary transaction or remittance advice. Q. Credit card transaction or telegraphic money transfer as evidence of payment by any other means, including information detailing non-cash compensation transaction. P. Permit to operate customs bonded warehouse, customs facilities and warehouses, and free zone. U. Formula of conversion, manufacturing. V. List of monthly importable materials, quota. W. List of imported purchases. X. Summary of export local sale. Y. Summary of liquidated and unliquidated entries. Z. List of subcontractors. A. List of inventory. B. Production reports. And C. Evidence of incentives enjoyed by the Board of Investment registered importers, and free zone locators. 4.5.4 Documentation on manufacturing, stock, and resale, which includes letter A, inward goods register or receipts journal, B, stock register or inventory record, C, production record, D, costing record, E, purchase, purchases book, and F, sales book. 4.5.5 Financial documents such as financial statements and other accounting information, which include letter A, cash receipts and disbursements books, B, subsidiary ledgers of accounts payable and accounts receivable, C, check records, and D, bank reconciliation records. 4.5.6 Charts and codes of account, general and subsidiary ledgers, general journal, accounting instruction, manuals and systems, and programs documentation that describes the accounting system used by the importer, and 4.5.7, whenever applicable, information or records as described in sections 4.5.1 to 4.5.6 of this order that are electronically recorded or stored. Section 5, Post-Clearance Audit. 5.1, Composition of Post-Clearance Audit Group. The Post-Clearance Audit Group is headed by an Assistant Commissioner who shall exercise direct supervision and control in the management of the following operating units of Post-Clearance Audit Group. Letter A, Trade Information and Risk Analysis Office, or the PCAG PIRAO, and B, Compliance Assessment Office, or PCAG-CAO. 5.2 Authority of the Commissioner to reorganize Post-Clearance Audit Group. The Commissioner, with the approval of the Secretary of Finance, is hereby authorized to determine the number of personnel requirements of Post-Clearance Audit Group and issue the necessary order to reassign the required organic personnel of Bureau of Customs to the group, subject to the principles of economy, efficiency, and effectiveness. The Commissioner is likewise authorized to further recommend necessary changes to the personnel and staffing pattern of the Post-Clearance Audit Group, and with the approval of the Secretary of Finance, submit the same for evaluation of the Department of Budget and Management. 5.3 Functions of Post-Clearance Audit Group. The Post-Clearance Audit Group is mandated to conduct, within 3 years from the date of final payment of duties and taxes or customs clearance, an audit examination, inspection, verification, and investigation of records pertaining to any goods declaration, which shall include statements, declarations, documents, and electronically generated or machine readable data for the purpose of ascertaining the correctness of the goods declaration and determining the liability of the importer for duties, taxes, and other charges, including any fine or penalty. The Post-Clearance Audit Group, Trade Information and Risk Analysis Office shall perform the following functions. Letter A. Review available trade data to determine compliance markers of industry or other means of data groupings and set benchmarks for the purpose of developing an audit program for the Commissioner's approval.
In coordination with the Management Information System and Technology Group or MISTG, develop a computer-aided risk-based management system. The parameters of each are to be based on objective and quantifiable data, subject to the approval of the Secretary of Finance upon recommendation of the Commissioner for use in the profiling and identification of potential proper priority audit candidates based on the approved audit program. Letter C, recommended for approval of the Commissioner of Customs, the potential priority audit candidates. Letter D,
develop policies, guidelines, manuals, and standard operating procedures relating to the audit process, and E. Perform such other functions as may be necessary or incidental in carrying into effect the provisions of this order and as may be provided by law. The PCAG CAO shall perform the following functions. A. Prepare the audit work plan, scope, and approach for the approved priority audit candidates. B. Conduct the audit examination, inspection, verification, or investigation of records subject to applicable laws, approved policies, guidelines, manuals, and standard operating procedures. C. Prepare and submit the required reports on audit findings and recommendations to the Commissioner of Customs for approval. Letter D. Establish and maintain a customs compliance program. And letter E. Perform such other functions as may be necessary or incidental in carrying into effect the provisions of this order and as may be provided by law. 5.4 Scope of Audit. The Bureau shall develop a computer-aided risk-based management system, the parameters of which are to be based on objective and quantifiable data to be approved by the Secretary of Finance upon recommendation of the Commissioner of Customs. 5.4.1 Post-clearance audit of importers shall be undertaken when firms are selected based on any but not limited to the following criteria. A. Relative magnitude of customs revenue to be generated from the firm. Letter B. The rates of duties of the firm's imports. Letter C. The compliance track records of the firm. Letter D. An assessment of the risk to revenue of the firm's import activities. And letter E. The compliance level of a trade sector. And letter F. Non-renewal of an importer's customs accreditation. 5.4.2 Customs broker and importer's duly authorized agent may be audited to validate information provided by their importer clients and fill information gaps revealed during the audit. 5.4.3 The Commissioner may authorize the conduct of compliance, audit of importers, locators, specific group of importers or other parties engaged in the customs clearance process as he may deem necessary. For this purpose, the Management Information System and Technology Group or MISTG in coordination with the PICAG-TIRAO shall develop the computer-aided risk-based management system to facilitate the risk assessment and conduct of audit. The PCAG shall gather data or information from other offices and organizations to set the risk parameters for audit. 5.5 Conduct of post-clearance audit. The PCAG shall prepare a set of post-clearance audit procedures for approval by the Commissioner to strictly govern the audit to achieve the highest level of objectivity, fairness, efficiency, and transparency. The guidelines shall include the following procedural or operational concerns. Letter A. Profiling or information analysis. PCAG TRAO shall perform risk profiling analysis activities on the importers. This includes data gathering and evaluation of import and export operations. Letter B. Audit notification. The Commissioner shall issue an audit notification letter or ANL to the company identified for audit. The ANL shall contain the name or names of the authorized customs personnel from PCAG-CAO to perform post-clearance audit. It shall be valid for 30 days, 30 calendar days from the date of issuance, subject to revalidation of the Assistant Commissioner for another 30 days prior to the expiry and must be served to the importer through any of the following modes of service. 1. By personal service at the principal place of business. 2. By registered mail. Or 3. Through electronic notice sent to the registered official electronic mail address during its validity. Failure to serve ANL within the period without proper justification shall make the customs personnel in charge administratively liable.
Letter C. Audit plan. The audit team shall prepare an audit plan to fit the circumstance of the audited company and meet the specific audit objectives in the most expeditious and transparent manner. Letter D. Conduct of audit proper. The audit team shall commence the audit proper not later than 60 calendar days from the service of the ANL. In case the importer manifests his intentions to avail the PDP, the conduct of the audit proper shall be deferred subject to the provisions of Section 6.1.2 of this order. The audit proper shall take place when the audit team actually conducts examination, inspection, verification, and investigation of accounting and financial records, and goods declaration and other records being kept and maintained by the importer. The audit team may require presentation of the original of the certified true copies of documents submitted for verification of its authenticity. A copy of any document certified by or on behalf of the importer is admissible in evidence in all courts as if it were the original copy. The audit shall be completed within 120 days, calendar days, per year of audit period from the date the importer receives the ENL. For this purpose, the audit is considered completed with the final audit report (FAR) with demand letter for post-clearance audit group. Clearing report of findings has been submitted by the audit team, endorsed by the Assistant Commissioner, and subsequently approved by the Commissioner. 5.5.2. Nothing in this section shall be construed as restricting or calling into question the right of the Bureau through the PCAG to satisfy itself as the truth or accuracy of any statement, document, or declaration presented for customs valuation purposes, and thus may be necessary for the purpose of collecting the proper duties and taxes, and to determine compliance with the government rules and regulations. 5.6. Access to records. 5.6.1. The importer shall give the Bureau personnel authorized to conduct the audit full and free access to the premises where the records are kept, or provide full and free access to a cloud-based data room or private server or other devices to conduct the audit. This may include access to records showing the importer's letter A, document flow, B, financial flow, C, goods inventory, and letter D, other businesses process necessary or relevant in determining one is the adequacy and integrity of the manual or electronic system or systems by which such recorded records are created and stored, and compliance with laws, rules, and regulations, particularly in relations to customs valuation, tariff classification, country of origin, and compliance with regulatory requirements, with the end in view of collecting the proper duties and taxes. Customs brokers and the importer's duly authorized agents acting on behalf of the importer at any stage of the customs clearance process are likewise required to give authorized Bureau personnel under PCAG full and free access to records covering transactions for purposes of validation and to fill information gaps revealed during the audit of their importer client. In addition, the authorized customs officer may require the importer and customs broker to submit certified copies of any such documents or extracts thereof.
5.6.2 um, the customs officer shall present written evidence of his authority. The person in charge of the premises must provide the officer with all reasonable facilities and assistance for the effective exercise of the officer's authority under this section. 5.7 Documents written in a foreign language. where a document in a foreign language is presented to a customs officer in relation to the carrying out of any duty or the exercise of any power of the Bureau of Customs. Said document must be accompanied with a translation in English, certified correct under oath by a translator accredited by the Department of Foreign Affairs or by the relevant foreign embassy or consular office. 5.8 Power of the Commissioner to obtain information and issue summons. For the effective implementation of the post-clearance audit functions of the Bureau, the Commissioner is hereby authorized to 5.8.1 obtain on a regular basis from any person in addition to the person who is the subject of a post-clearance audit or investigation or from any office or officer of the national and local governments, government agencies, and instrumentalities, including the Bangko Sentral ng Pilipinas and government-owned corporate um, company corporate any information such as cost and volume of productions, receipt or sales and gross income of taxpayers, and the names, addresses, and financial statement of corporations, regional operating headquarters of multinational companies, joint accounts, associations, joint ventures, or consortia and registered partnerships and their members whose business operations or activities are directly or indirectly involved in the importation or exportation of imported goods or products manufactured from imported component materials. 5.8.2 Summon the person liable for duties and taxes or required to file goods declaration or any officer or employee of such person or any person having possession, custody, or care of the book of accounts and other accounting records containing entries relating to the business of the person liable for duties and taxes or any other person appear before the Commissioner or the duly authorized representative at the time and place specified in the summons and to produce such books, papers, records, or other data, and to give testimony. 5.8.3 Take such steps. Take such testimony of the person concerned under oath as may be relevant or material to such inquiry or obtain information from banks or other financial institutions on commercial documents and records pertaining specifically to payments relevant to import transactions. The provision of the foregoing paragraphs notwithstanding, nothing in the section shall be construed as granting the Commissioner the authority to inquire into bank deposits of persons or entities mentioned in this order. Section 6. Prior Disclosure Program. 6.1 Who may avail of the Prior Disclosure Program? 6.1.1 Any importer, without waiting for the issuance of an authority notification letter or application form for Prior Disclosure Program, may avail of the PDP by A. Submitting the duly accomplished application form prescribed by the Bureau for prior disclosure stating the errors in goods declaration, and B. Tendering payment of the duties, taxes, and penalties if applicable. 6.1.2 Any importer who has received an authority notification letter may still avail of the prior disclosure program by submitting the duly accomplished application form prescribed by the Bureau for prior disclosure stating the errors in goods declaration and tendering payment of the deficiency, duties, taxes, and penalties within a period of 90 calendar days from the receipt of the ANL. The importer may amend the PDP application and pay additional deficiency, duties, taxes, and penalties within an additional non-extendable period of 30 calendar days from the filing of the PDP application form should there be any adjustments to the original application or new issues discovered that need to be disclosed. 6.2 Exclusions from the prior disclosure program. The following shall not be qualified for the PDP. 6.2.1 Goods declarations which are the subject of pending cases with any other customs office. 6.2.2 Goods declarations which are covered by cases already filed and pending in courts. And lastly, goods declarations involving fraud as defined under section 10.3.2 of this order.
Effects of prior disclosure program. Instead of the penalties provided in section 10.3.1, the following penalties shall be imposed on the approved application for PDP in conformity with sections 104 and 108 of the CMTA. Subsection 6.3.1, for a PDP applicant who has not yet received an ANL payment of the deficiency in the duties and taxes due plus legal interest as provided in Section 7. 6.3.2, for a PDP applicant who has received an ANL and availed of the program pursuant to Section 6.1.2, payment of the deficiencies in duties and taxes due, plus a penalty of 10% of the basic deficiency and legal interest as provided in Section 7, or 6.3.3, for a PDP applicant who has made disclosure on royalties and other proceeds of any subsequent resale, disposal, or use of the imported goods that accrues directly or indirectly to the seller, or any subsequent adjustment to the price paid or payable. Payment of the deficiency to duties and taxes due without penalty and interest, provided that the applicant files for PDP within 30 calendar days from the date of payment or accrual of subsequent proceeds to the seller, directly or indirectly, or from the date the adjustment to the price paid or payable is made. Upon failure to pay within 30 calendar days, the disclosure shall be subject to Section 6.3 or 6.3.2 of this order. 6.4. Verification in action on the application for PDP. 6.4.1. The PCAG shall verify the completeness of the PDP application from including payment made in other supporting documents. Failure to comply with the necessary documentation shall result in the non-acceptance or disapproval of the application. 6.4.2. The audit team shall then verify the accuracy of the deficiency, duties, and tax computation and determine if all errors are fully disclosed. The verification and approval or denial of the PDP application shall be completed within the period of 90 calendar days from the submission of the complete PDP documents. 6.4.3. In relation to the specific goods declaration, subject of the prior disclosure program, when there are findings of fraud, or when there are materials inaccuracies, mistakes, or errors in the goods declaration or outright violation committed that are not subject of the disclosure but has an adverse impact on the government revenues, ECAG shall recommend to the Commissioner the conduct of formal and full audit. 6.4.4. In all cases, the tender payment of In all cases, the tender of payments shall be accepted by the Bureau to be applied to the deficiencies in duties and taxes, including penalties, interest, fine, or surcharge as voluntarily disclosed, regardless of whether the prior disclosure application is approved or denied by the Commissioner. Any request for a waiver of penalties, interest, fine, or surcharge made by the importer shall be subject to the final approval of the Secretary of Finance. Interest, Section 7. Interest on deficiencies, duties, taxes, and other charges, plus fine or penalties, an interest of 20% per annum counted from the date of final assessment as provided under Section 429 of the CMTA shall be imposed on 7.1 Wire Disclosure Program availment. 7.2 Efficiency, duties, taxes, and other charges. And 7.3 Fine or penalty if any. Section 8 Remedies of the importer. When the request for reconsideration or the investigation is denied by the Commissioner as provided in sections 5.5.1 F in whole or in a part, the importer may appeal such denial to the Court of Tax Appeal within 30 days from the receipt of the adverse ruling or decision of the Commissioner. Section 9 Remedies of the Bureau. The, the remedies of the Bureau for the collection of import duties, taxes, fees, or charges resulting from the conduct of post-clearance audit shall be obtained by 9.1. Restraint of goods, chattels or effects, and other personal properties, or whatever character, including stocks and other security debts, credits, bank accounts, and interest in the rights personal property. Upon failure of the person owning any delinquent duty, tax, and other charges to pay at the time required, the Commissioner shall seize and restrain the goods, chattels, or effects and the personal property, including stocks and other security debts, credits, bank accounts, and interest in and rights to personal property of such person, in sufficient quantity to satisfy the duty, tax, or other charge, and the expenses of the district, and the cost of the subsequent sale, to safeguard the interests of the government. The Commissioner may place under constructive restraint the property of a delinquent importer who, in the opinion of the Commissioner, is retiring from any business subject to duty and tax, or is rendering, or is intending to leave the Philippines, or to remove the property therefrom, or to hide or conceal the property, or to perform any act tending to obstruct the proceedings for collecting the duty and tax due for which may be due. Section 9.2 Levy upon real property and interest in the right to real property. After the expiration of the period within which to pay the duty, tax, and other charges, as prescribed in this section, real property may be lived upon before, simultaneously, or after the restraint of personal property belonging to the importer. To this end, the Commissioner or the duly authorized representative shall prepare an authenticated certificate showing the name of the importer and the amounts of the duty and tax and penalty due. The certificate shall operate with the force of legal execution throughout the Philippines. 9.3 Civil or criminal action. Any any or all of these remedies may be pursued at the discretion of the Bureau, provided that the remedies of restraint and levy shall not be allowed when the amount of duties and taxes, including interest and penalties, involved is not more than 10,000 pesos. The Bureau shall advance the amounts needed to defray costs of collection by means of civil or criminal action, which shall be included in the budget of the Office of the Commissioner, including the preservation or transportation of personal property district and the advertisement and sale thereof, as well as of real property and improvements thereon. Section 10 Administrative and Criminal Offense. 10.1 Failure to keep records. The following penalties are imposable to those who fail to keep and maintain the prescribed records. 10.1.1 Suspension or cancellation of accreditation as importer or broker with the Bureau. 10.1.2 Surcharge of 20% of the dutiable value of the goods, which is the subject of the importation for which no records were kept and maintained. 10.1.3 Hold delivery or release of subsequent imported articles to answer for the fine and revised assessment. 10.1.4 Criminal prosecution punishable with imprisonment of not less than 3 years and 1 day, but not more than 6 years, and or a fine of 1 million pesos. And 10.1.5 Waiver of the right to contest the result of the audit based on records kept by the Bureau.
10.2 Failure or refusal to give full and free access. The following penalties are impossible to those who deny the authorized customs officer full and free access to the records required to be kept and maintained. 10.2.1 Suspension or cancellation or accreditation as an importer or broker with the Bureau. 10.2.2 Punishment for contempt or for contumacy or for refusal to provide access from the proper court having criminal jurisdiction over the matter. 10.2.3 Reassessment of the importation subject of audit, the declared transaction value being presumed inaccurate, applying therein the correct valuation method, tariff classification, quantity or country of origin as applicable based on the available data. 10.2.4 Surcharge of 20% on dutiable value of the goods which is subject to the importation for which no records were kept and maintained. 10.5.2 Hold delivery or release of subsequent imported articles to answer the fine and any revised assessment. And 10.2.6 Criminal prosecution punishable with imprisonment of not less than 3 years and 1 day but not more than 6 years and or fine of 1 million pesos. 10.3 Failure to pay correct duties and taxes on imported goods. Any person who, after being subject to post-clearance audit and examination, is found to have incurred deficiency in duties and taxes paid from imported goods shall be penalized according to 2 degrees culpability subject to any mitigating, aggravating, or extraordinary factor that are clearly established by available evidence as described hereunder. The first one is 10.3.1 negligence. When a deficiency results from a offender failure to an act or act of omission or commission to exercise reasonable care and competence in ensuring that a statement made is correct, the offender shall be charged for committing negligence, and if found guilty shall be penalized with fine equivalent to 125% of the revenue loss, provided that subject to Section 108, Chapter 2, Title 1 of CMTA, a penalty of 25% of the revenue loss shall be imposed on an inadvertent error amounting to simple negligence. The second one is the 10.3.2, which is the fraud. When the material false statement or act in connection with the transaction was committed or omitted knowingly, voluntarily, or intentionally as established by clear and convincing evidence, the offender who is charged for committing fraud is fraud guilty thereof shall be penalized with a fine equivalent to 6 times of revenue loss and or imprisonment of not less than 2 years but not more than 8 years. Section 11. Records to be kept by the Bureau. The PCOG shall keep a database of importer and customs broker profiles which shall include a record of audits result and the following information in papers. 11.1 Articles of Incorporation. 11.2 The company structure which shall include but not limited to 11.2.1 Incorporators and Board of Directors. 11.2.2 Key Officer. 11.3.3 Organizational Structure. 11.3 Key Importations. 11.4 Importation Privilege Enjoy. 11.5 Record of Violation and Penalties. 11.5.1 Infringements committed. 11.5.2 Instances of prohibited importation. 11.5.3 Instances of smuggling. 11.5.4 Instances of technical smuggling, misdeclaration, misclassification, and undervaluation. 11.6 Risk categories. 11.7 Audits and results. And 11.08 The other information and documents from the various offices of the Bureau that may be necessary in order to facilitate the conduct of post-clearance audit. Section 12, Audit Monitoring and Record Keeping. PCAG, in coordination with the MISTG, shall establish and maintain a real-time case monitoring and control that approved audit recommendations are properly implemented. For this purpose, PCAG shall maintain a secure database of all audit results and records. Section 13, Periodic Review. Unless otherwise provided, this order shall be reviewed every 3 years and be amended or revised as necessary. Section 14, Turnover of Records. The DOF FAIU Financial Analytics and Intelligence Unit, formerly known as DOF FIU Fiscal Intelligence Unit, shall turn over all files and documents, including any pending post-clearance audit, to the BOC PCAG. Section 15, Repealing Clause. Department Order Numbers 11/2014, 14/2014, 44/2014, and 33/2015, issued by the DOF CAUS number 299, 5/2001, 4/2004, 5/2007, and 3/2015, and all other orders, memoranda, circulars, or part thereof which are inconsistent with this order are hereby deemed repealed and or modified accordingly. Section 16, Separability Clause. If any part of this order is declared unconstitutional or contrary to existing laws, the other parts not declared shall be remain in full force and effect. Section 17, Effectivity. This order shall taken effective 30 calendar days after its publication at the official gazette or a newspaper of a national circulation. The Office of National Administrative Register or owner of the UP Law Center shall be provided 3 certified copies of this order.